It's time for your Low Country real estate market update. It's the Brian Beatty Real Estate Show. Brian is one of the top 1% real estate agents in Charleston. Find him online at listingsincharleston.com. That's listingsincharleston.com. Or call him at 843-345-1273. Now, broadcasting from the WTMA studios, here's your host, Brian Beatty.
Good Saturday morning, Charleston. I'm your host, Brian Beatty. You're listening to the Brian Beatty Real Estate Show here on the Big Talker, 1250 WTMA. Thank you for joining me this morning. I've been on the radio talking about all things real estate here since about spring of this year, and I'm honored to be on the air with you here this morning. For those of you that have tuned into this program before, thanks for coming back. I've been kind of teasing y'all over the past few weeks about my end-of-the-year report that I've spent quite a bit of time putting together. So thanks for coming back. If this is your first time listening, my goal for this show is to just help you separate the facts from the buzz and hype of the media and from the plethora of misinformation out there, which is, by the way, mostly from our industry, real estate agents, so that you can make informed real estate decisions when it comes time to buy or sell a home. And of course, secondary to that goal is my interest in working with you as your agent when it comes time to buy or sell a home. I do sell real estate during the week. I've been in the top 1% of agents here since 2009. So if you're listening and you're planning on putting your home on the market or considering buying a home or investment property next year, best way to contact me is through my website, listingsincharleston.com. Go there and take a look at our current and sold listings, search the MLS, read testimonials, or click on the sellers tab and you can learn more about my 59-day home sale guarantee for 4.5% commission. So give me a call if you're on the road, or feel free to text me on 843-345-1273. So coming up, we have a lot going on, and I got to say, I'm pretty excited about this show. I'm just going to put it out there. I think this is going to be an awesome show. So what I want to do is, in order for us to kind of tell you how 2013 shaped up, I first want to go back in time and talk about 2012, because in order to really properly compare our market and how we did, we first need to know where we were, which is 2012. So how did things look in 2012? Well, let's take a bit of a step back in a time. And if you'll recall, in 2012, we had low mortgage rates, affordable pricing, and rising rents. So it made it very attractive for buyers, particularly investors. It was a great time to pick up a distressed property. There was still quite a bit of them at that point, and you could pick them up either as an investment property or as a personal property. Flipping and then buying and holding were quite popular. So it was a time in our market where people were I think just getting to the point where they were realizing that the market was about to shift, especially toward the end of 2012. Now, some of the markets in 2012 were already low on inventory, like Mount Pleasant and some areas of downtown Charleston. So what happened really was, if you look at 2011 to 2012, at the end of 2012, we only had a 1.1% increase in new listings. So what does that say? It says that there was a lack in 2012 of seller confidence in most markets. Again, we were just starting to build some steam. Of course, from 2008 to 2011, that was a very difficult time for a lot of people. Short sales, foreclosures, people losing equity, people losing their jobs, people getting a curtailment of income. It was just a tough time. So you look at the sales for 2012, and they were up a little over 13% from 2011, and close to 30% of the sales in 2012 were distressed properties. Short sales, foreclosures, estate sales, so on and so forth. Distressed sales, 30%. That has reduced in 2013, and I expect it to reduce in 2014. But we'll get to that a little bit later, because I think there's some extenuating circumstances that I want to talk with you about. So let's look at overall inventory, because inventory really is how we measure the health of a real estate market. We say that 6 to 8 months worth of inventory is a normal market. There's no upward or downward pressure on pricing. There's no over or under supply of housing. It's just a normal market, so normal appreciation occurs. There's no swift rise or decrease in pricing. So inventory in 2012 reduced by 21% from 2011, and properties on average were getting a little over 92% of their list price. So again, it was a strong buyer confident market as our market started to kind of slowly push toward a seller confident market. And then lastly, let's look at prices in 2012. Prices were up 4.5%. I look at median sales price for this. So the median sales price in 2012 was up 4.4% versus 2011. So that basically is what our market looked like in 2012. And I kind of broke things down here by county so that we can look at things really on a more specific level. So if you look at Dorchester County in 2012, the average price per square foot was $82 a square foot. The average days on market was 91 days. Interestingly, in Dorchester County, the difference between the list price and the sales price was 97.56%. That is a very interesting statistic to me. We had 6.8 months worth of inventory, so it was 6.8 months. That's a normal market. Again, there's no upward or downward pressure on pricing with that amount of months on inventory. And by the way, months of inventory, if I'm losing you on what that means, months of inventory is where you take the current number of properties for sale and you divide it by the 30-day average of home sales. That gives you the months of inventory. So back in 2008, 9, 10, even parts of 2011, in some markets, we had years worth of inventory, which is an extreme buyer's market, which means that prices are going to go down. There's plenty of choice. Buyers are not motivated to bid up a property. There's plenty to choose from. So that's what happened in Dorchester County in 2012. In Berkeley County in 2012, kind of the same story, 6.76 months of inventory. Their average days on market was a little over 4 months, 128 days. The average price per square foot was higher. It was $96 a square foot. They ended up selling 2,252 homes in 2012. So again, a normal market for single-family attached and detached housing in Berkeley County. And then if you look at Charleston County, this is where we've seen the biggest shift this year, I think, especially in some markets in Charleston County. In 2012, we had a little over 8 months worth of inventory. And again, this is for all price ranges, so something to keep in mind. When you look at Dorchester and Berkeley County, there are not a lot of $1 million plus listings in those areas. Don't get me wrong, they exist, but the majority of our high-end market is in Charleston County, so that's what affects the numbers, because 2011, 2012, there just weren't a lot of purchases in the $1 million plus price range. That was still a saturated market. There was plenty of choice. And of course, as investors or as buyers, you could snag up a great deal. That has started to change in 2013. And I expect it to change a little bit more in 2014. Again, there's some caveats to that we'll talk about. But, a little over 8 months in Charleston County. So just on the brink of it still being a buyer's market. The difference between the list price and the sales price was about 5.5% off. The average days on market, 151 days. So that's 5 months there. The average price per square foot, $149 a square foot. And in 2012, we sold 5,974 houses. So that's basically what happened in 2012. Again, to kind of recap, we were a buyer's market that started to shift toward normalcy. Some markets had seen that more than others. And as our momentum started to build, we then shifted into a seller's market. And I'm going to talk next segment about how I think we shifted a little too hard, too fast. So stick with me, because this is going to be kind of a cool progression here. We'll talk about 2013 next, talk about some of the big news stories, in case you've kind of forgotten. Then we'll have a lender on the line to talk about current interest rates and some of the changes that are coming down the pipeline for 2014. And then, of course, lastly, we'll talk about what I expect to happen in 2014. So, again, this is the Brian Beatty Real Estate Show. Find me online at www.listingsincharleston.com. Feel free to call or text me at 843-345-1273. You're listening to the Brian Beatty Real Estate Show on the Big Talker 1250 WTMA. Stick around. We'll be right back.
Have a real estate question? Ask Brian Beatty. Send him an email, lowcountryhomesales@gmail.com. The Brian Beatty Real Estate Show is on 1250 WTMA. WTMA. Expert news and views on the Lowcountry real estate scene. The Brian Beatty Real Estate Show on 1250 WTMA.
Welcome back. This is the Brian Beatty Real Estate Show here on the Big Talker 1250 WTMA. Thanks for joining me this morning for my end of the year update review and looking forward into 2014. If you're just joining us, last segment we talked about kind of what happened in 2012. I wanted to kind of build up into how our market fared this year, how we shaped up. So in order to do that, I wanted to give you some background information on where we came from. So if you'd like to contact me, my website, www.listingsincharleston.com, is the best way to get in touch with me during the week. I do sell real estate during the week, so if you're considering buying or selling a home in 2014, please reach out to me. My number is 843-345-1273. Again, the website, listingsincharleston.com. You can go on there. You can take a look at this market update. I'm going to put it in the big blog for everybody to follow. I'll have attachments for the numbers that I read off. I'll have the 2012 year in review, the 2013 year in review, and then, of course, looking forward into 2014, I'll put that information on there as well. You can search the MLS. You can look at current and past listings. You can go to the sellers tab, and you can learn more about my 59-day home sale guarantee for 4.5% commission. So, again, listingsincharleston.com if that's of interest to you and you're planning on buying or selling a home or know someone that is in 2014. So, 2013, how did we shape up? I thought it would make sense to just kind of give you an overview of the market in general and not just real estate, stocks, bonds, housing, the like. So let's start with stocks, okay? And again, I am not a financial analyst or advisor. This is just my takeaway from staying informed on all things real estate related and investments related. So if you're a financial advisor, don't quote me on all this stuff, but hey, it's just general news, right? So as far as stocks go, the outlook was that since the Fed wasn't expecting to raise rates, equities were predicted to decline by, I think, a modest 8% is what they said. But what happened was the Fed didn't raise rates and stocks kept rallying. So equities soared much more than expected, I think closer to 25%. So it's been a very interesting stock market this year. If you look at bonds, the outlook was that long-term rates were expected to rise. Investors were warned to kind of wean their exposure to government debt, especially treasuries. And in reality, market interest rates did rise, and the funds that invest in long-term U.S. Treasury bonds lost more than 10%, especially through the first part of November, which is when this information was available. And again, as far as the housing information goes, I understand that we have not yet finished out this year, so there's still some data left to collect before I can give an official reporting. But we've got, maybe a week or two left of sales, so I don't think it's going to change that much. As far as housing goes, just on a national basis, here's what the outlook was. The outlook was that real estate looked as if it was finally stabilizing. We talked about the fact that low interest rates, an abundance of choice, and rising rents made it a great market for a buyer and an investor. And since buyers were ready to kind of come off the sidelines and get involved in the real estate market, prices were expected to rise. But by how much? 1%. That's what they thought the rise in pricing was going to be based on a report from the National Association of Realtors. But what actually happened was that the market stabilized, and as demand rose, but sellers were slow to put their houses on the market, tight supply sent prices up over 12% nationally. So, it's been a very interesting real estate market this year, and I've been saying for months now that I think we corrected too hard, too fast, and I'm going to read off the pricing increases for Charleston, Berkeley, and Dorchester County, along with a few other market stats that I think are going to surprise you. And then, of course, a little later on in the show, I'm going to tell you what I think is going to happen in 2014. And then lastly, if we just look at the job market, we were expected to put 173,000 new jobs on the market on a monthly basis, and we exceeded that. We ended up putting 190,000 jobs on the market. We were expecting for new work to be available and for people to start getting raises, start making some money that had been kind of waiting to be released for whatever reason. So I think overall our economy has done well this year. I'm sure that you would agree. But here's some of the other big news stories of 2013. That's basically what just happened overall economy wide. One of the big news stories that we've harped on a lot on this show is what happened to flood insurance starting October 1st. And if you've listened to this show repeatedly, I apologize for kind of beating you over the head with this, because I know I talk about it a lot, but it's important. And if you're just joining us and you're listening to the Brian Beatty Real Estate Program here on 1250 WTMA, October 1st, flood insurance rates changed. If you were built in Charleston County prior to 1971 and you're in a flood zone, chances are your flood insurance is going to increase. And the reason for that is that prior to 1971 in Charleston County, you did not have any requirements to build your home a certain level off the ground based on the National Flood Insurance Program's, federally mandated, height for that flood zone. So if you built your home on a slab and you're in a flood zone in 1970, that was okay. Well, the government, FEMA, which is a government-controlled program, has been kind of keeping rates artificially low for flood insurance for properties that were built prior to 1971 in Charleston County, and that year built is different for different counties all over the nation. It's whenever they join the National Flood Insurance Program. So the thing to take away from that is, number one, call your insurance agent. Number two, if you don't have an elevation certificate, get one. And number three, of course, continue to tune into our program so that we can update you on news as it becomes available to us. So one of the biggest deals this year was the changes to flood insurance programs. So go to my website, listingsincharleston.com. I have podcasts on there from previous radio shows, and you can listen to all the information we've put together over the months as it relates to that. Another big story in 2013, and I don't know if this is going to be extended in 2014. As of right now, it's not. But in 2013, the Mortgage Foreclosure Debt Forgiveness Act, which was originally passed in 2007, was extended through 2013. And what that means is this. If you do a short sale on your house, let's say that you sell it for $250,000, but you owe $350,000, that $100,000 loss prior to 2007 was considered income. So you get taxed for that difference. That could be, a $30,000 hit on your taxes. So the Mortgage Foreclosure Debt Forgiveness Act, I guess that's a mouthful, states that quote-unquote income is going to be forgiven. So starting January 1st, 2014, if you're doing a short sale, as of right now, you're going to have to pay taxes. That difference is going to be treated as income. Now, of course, the hope is that Congress gets together at some point in 2014 and agrees to extend that tax break and have it be extended retroactively to the beginning of the year, which I think would be very helpful. So that was, a big deal in 2013. It still affects, 10 million homeowners here in our nation, people that owe more than their home is worth. Another big change in 2013 was that the FHA changed their HUD changed their guidelines for FHA-based mortgages so that if you had a foreclosure or a short sale, you could then go and get a new mortgage as soon as 12 months after that foreclosure or that short sale. Of course, certain requirements have to be met, but that is a significant jump from the standard 36-month window that was in their previous guidelines. So if you got foreclosed on or if there was a short sale in your history, you could get a mortgage in as soon as a year after that date. And by the way, that could mean for 2014 that, people that were renting, people that got foreclosed on or did a short sale that couldn't buy now can buy. So what's going to happen with rental pricing? That's kind of a curious thought. All the investors that purchased and held property, me being one of them, that kind of are really enjoying the rental increases that we've seen over the past year and a half. Maybe that'll slow down in 2014. We'll talk about that next. And then the last two big news items, I think, are the Fed announcing a little earlier that they're going to begin tapering off, which, of course, everybody believes to be a sign that interest rates will now start rising, which I agree, and I think most people in the industry do. And coming up next, we're going to have Bill Sandvig of Movement Mortgage talk with us about that. And I'd say after that, overall, just great market in 2013. It corrected a little bit too fast. I'm going to have Bill come on the line. I'm going to talk with him about what's going on with the Fed and the news that they released earlier this week. And then our last segment, I'm going to talk about the numbers for the Tri-County area in 2013 and how I expect those to change in 2014 so that you can plan when you're considering buying or selling a home. So stick with me. This is the Brian Beatty Real Estate Show on the Big Talker 1250 WTMA.
Find Brian Beatty online at listingsincharleston.com. The Brian Beatty Real Estate Show continues next on the Big Talker 1250 WTMA. WTMA. Now, here's more of the Brian Beatty Real Estate Show on the Big Talker 1250 WTMA.
Good Saturday morning. Welcome back. You're listening to the Brian Beatty Real Estate Show here on the Big Talker 1250 WTMA. For those of you just joining us, we've kind of taken a step back in time. We looked at how the market kind of changed this year. We compared it to 2012. So I kind of gave you a big recap. What happened in 2012, what happened in 2013, and what we expect to happen in 2014. And I kind of left last segment with a little bit of a teaser in that the Fed has decided to go ahead and initiate the tapering off. And so I've got Bill Sandvig on the line with Movement Mortgage, and Bill is a lender that I use frequently. Bill, you on the line?
Yes, Brian. Thank you.
Cool. So, big news this week. The Fed decided that they were going to go ahead and initiate the tapering off here. So, what exactly happened? What exactly does that mean?
Well, basically, for the last few years, the Fed has been buying mortgage-backed securities and bonds to hold the interest rates down. About 3 months ago, due to growth in the economy and signs of economic recovery, the Fed announced that they were going to cut back on the quantitative easing in the bond and mortgage-backed security program.
Okay.
When that happened 3 months ago, it was September. You might remember, in 3 days, the market turned down over 700 points. And that was a sign that investors weren't quite ready they weren't quite on board with the Fed's idea that the economy was back.
Okay.
So the Fed came back out. They said, quantitative easing is back on. We're going to slow this thing down. And after more and more signs of continued economic growth, just this week, Bernanke came back out, said we're going to slowly take the gas pedal off this quantitative easing, and they are stepping down the bond program from $85 million in bond purchases a month to next month they're going to be $75 million in purchases.
Okay.
So
I think the big question that everybody has is how is this going to affect interest rates? And I know it's tough to say, but What are your thoughts on it as someone that does this for a living?
Well, interest rates are going to start to slowly move up. As the bond buying program eases off, the treasuries and mortgage-backed securities will continue to slowly rise, which is going to directly relate to rising interest rates. And we've actually already seen that just this morning. Bond is rising up to close to new annual highs, and interest rates and 30-day fixed rates and the rates are going to follow.
Okay. You said something that I want you to kind of say again, but say it as simply as you can. How are interest rates calculated? How are they determined?
Interest rates are based on a few different factors, but primarily mortgage-backed securities. Okay. And the mortgage-backed securities are based on the palette of the investor. So a very secure and low-risk investment, mortgage-backed securities and bonds. So when investors don't feel good about where the primary market is, they can guarantee a certain return on investments like mortgage-backed securities. Mm-hmm. When investors start to take their money out of mortgage-backed securities, put them back into the open market, interest rates go up. So as quantitative easing or the bond buy program slows down, that guaranteed return that investors have had in those very secure assets, they'll stop investing in those, move into the open market, and to draw in more investors, interest rates will rise.
Okay. And I know it's impossible to say because it's really just based on speculation at this point, but where do you think rates are going to be by, say, spring of 2014, and where do you anticipate they to be this time next year?
That is definitely hard to guess, but and there hasn't been any future announcements about what speed they will slow down with quantitative easing, but based on what we've had happen in the last 6 months, I would not be surprised to see interest rates pushing 5.5% by this time next year. Okay. on a 30-year fixed.
I think that's reasonable. I think that I've read a lot of reports in preparing for this end of the year market summary and then looking forward into 2014. And everybody loves to share their opinion on what interest rates are going to do, but it really is just an opinion. So just keep that in mind, listeners, when you're looking at reports, you're listening to various media outlets. We really don't know what's going to happen with interest rates, but common sense should apply, and that interest rates aren't going to spike to something astronomical that then is going to kill the real estate market. So, Bill, I wanted to switch gears for just a second. There was an announcement a little earlier in the month about FHA's plans to slowly reduce its stake in the market, kind of get out of the market, so to speak. So what exactly does that mean, and how does it affect us in 2014?
Well, FHA and HUD has kind of been showing their colors slowly over the last 2 years that this type of announcement was going to come out. They've been systematically rising the cost of doing a FHA loan.
Right.
Mortgage insurance has been going up every 4 months like clockwork. The cost to do an FHA loan has gone up. Even the credit requirements to do an FHA loan have gotten tighter. Mm-hmm. It's almost as if the government was saying, we're not going to pull the plug on this program because we know that it's a need. We want first-time home buyers. We want home buyers that don't have perfect credit to be able to buy a home. But if there's any way that you can figure out to do a conventional loan and get into regular investment loan, that's what we want you to do.
Gotcha. And just, kind of recapping from last segment, if you're just joining us here with Bill Sandvig of Movement Mortgage on the line, FHA kind of stepped in 2008 amid the financial crisis and raised its limits so that it could help home buyers. And I think according to FHA, they said something that, the program has close to quadrupled its activity as the private market retreated in that financial crisis period. So they had to go to the Congress. They had to borrow, I think, close to $2 billion. And now they're trying to get out of the market, return it to normalcy, return it to kind of market-based conditions. And as such, they're passing those fees onto buyers. So, Bill, what else do you think home buyers, home sellers, people looking to refinance should know and should plan for come 2014?
Well, I think anyone that is looking for a mortgage needs to understand that the rules for lending have changed. Not that there isn't money available for lending, not that no one can get a loan, but the loan has to be properly documented. Mm-hmm. The underwriting requirements are not gray, they're black and white. And so people need to understand when they're going into the process, whether it's refinancing or selling a home or buying a home, that they need to have people they can trust to guide them through the process. Mm-hmm. And they need to understand that the underwriting requirements and the documentation requirements are going to be the same for everyone, and they're going to be very inclusive.
Right. And Movement Mortgage has a very unique way of qualifying a home buyer, which is why I've partnered with you guys and why you guys do such a great job for me on both the buying end and on the selling end to make sure that the buyers for my listings are pre-approved. So give us kind of a 1-minute rundown of why Movement Mortgage is different in that regard.
Sure. One of the things that we do different is we really focus on front-loading the process. Because there is so many requirements and so much documentation and so many hands that go into the mortgage process and a real estate transaction, we really focus on getting it done on the front end of that process. If you have a 30-day contract, we want everything out of the way in the first 7 days. One of the ways that we do that is all applications go straight from the loan originator to the underwriter. There's no middleman where that file is taken and sent somewhere else to be organized and be stacked. That it goes right from the loan officer to the underwriter. That cuts out days on the front end of the process. Mm-hmm. And at Movement Mortgage, we set the expectation that from the time it leaves the loan officer's hands, that underwriter is going to have a decision in 6 business hours.
Nice. So the really cool thing about that is that in some of the closings that y'all have had, you're getting a clear to close in 7 days, or you're getting a clear to close sometimes less than that, right?
Yes, that's correct.
Yeah,
and our company goal is 7 business days from the time that we put that application in. We will have the borrower portion completely done with their process. That way, they can go and think about setting up the moving truck, turning on the power, packing up boxes. We don't want them to stress to the last hour about getting the loan closed or if the loan is going to close.
Right.
And so even though it can be a 30-day process, we want them to not have to stress about it and maybe even have a conversation about closing on the house a week early.
Right. So the great thing about that is, contractually one of our biggest obstacles is having to ask for extensions because the loan hasn't been processed or we haven't received final loan approval. And with Movement Mortgage, the expectation has been set and really met in all the instances that I've worked with them, that if they say that they can close you on time, they can close you on time. It's great to work with y'all. Thank you very much, Bill, for being on my program. Give us your contact information.
Sure, Brian. Bill Sandvig with Movement Mortgage, and my direct line is 843-300-7870, and I can be reached at bill.sandvig, Sandvig, at movementmortgage.com.
All right, Bill, thank you very much. Coming up, I'm going to give you what to expect in 2014, what to plan for. So stick around. You're listening to the Brian Beatty Real Estate Show on the Big Talker 1250 WTMA.
Stay tuned for more of the Brian Beatty Real Estate Show on 1250 WTMA and WTMA.com. WTMA. You're listening to the Brian Beatty Real Estate Show on the Big Talker, 1250 WTMA and WTMA.com.
Welcome back. This is the Brian Beatty Real Estate Show here on the Big Talker 1250 WTMA. Thank you for joining me this morning. This is our last segment, And if you've been following us since we started at 8 a.m., we first talked about what happened in our market in 2012 so that we can understand what happened this year, 2013. And I went through the numbers for the Tri-County area in 2012, and I told you that I was going to go through the numbers for the Tri-County in 2013, which I have yet to do. So I'm going to do that in just a moment. But just a quick thing here. If you're considering buying or selling a home in 2014, it's my pleasure to be on the radio here with Saturday mornings to share my experiences with you. And, as a top agent in our market, I get to come on here and talk about what I see as being the trends in our market. I get to talk with you about the facts and the data, and again, what I experience on a day-to-day. So if you're considering buying or selling a home here in 2014, please reach out to me. My website is listingsincharleston.com. You can search the MLS. You can look at current and past listings. You can read testimonials. And if you're considering selling your house, then you can learn more about my 59-day home sale guarantee for 4.5% commission. Just click on the Sellers tab. So that website is listingsincharleston.com, or you can call or text me at 843-345-1273. So we talked about 2012. We talked about the big news in 2013, some of the things that shaped our market and will shape our market going into 2014. So I wanted to get through what's going on with the Tri-County. These are the end of the year numbers. And again, I realize that we still have a few days left in December and that these are not official numbers, but they're not going to be off by much. So the percentages really are still going to apply. So we're going to jump right in here. Let's start with Berkeley County. Berkeley County in 2012 was a normal market. They had a little over 6.5 months of inventory. Now they are a seller's market. They are at 5.5 months of inventory. The average days on market went from 93 days in 2012 to 71 days in 2013. So 2.5 months is what you can expect if you're going to put your house on the market until the time you're under contract. The average price per square foot in Berkeley County went from $96 to $100 a square foot. And then lastly, if you look at just the sales total, we had 2,252 sales in 2012. And this year, we'll sell closer to 2,700. So big jump there. That's a lot more sales than in 2012. So let's move over to Dorchester County. Dorchester County in 2012 was a normal market. There was no upward or downward pressure on pricing. There were still plenty of pockets that had distressed inventory, and there were still plenty of pockets that had new construction. So Dorchester County is kind of an interesting county when it comes to coming up with numbers, but here they are. They went down to 5.5 months of inventory in 2013, so they're now a seller's market. And again, a normal market is 6 to 8 months worth of inventory. Inventory is the total number of properties divided by monthly sales. So that's how we measure the health of a real estate market. Average days on market went from 91 days to 71 days, which is almost exactly what's going on in Berkeley County. So a little over 2 months, and you'll be under contract if you price your house right. Average price per square foot went from $82 to $86 a square foot. And the total sales on an annual basis in 2012 were 1,889, and this year we'll close about 2,500 homes. So again, a big jump there in closings in Dorchester County. Now, Charleston County is a little bit different because that's where we have our luxury markets as well. Not that there isn't a luxury market in Dorchester or Berkeley County. There are certainly plenty of $1 million plus homes, but the majority of them, of course, are in Charleston County. So looking at the months of inventory in 2012, we had 8 months worth of inventory. We now have a little over 6 months of inventory. Now, in some areas of Charleston County, like Mount Pleasant, for example, we have like 3 months of inventory. It's an extreme seller's market. So don't be fooled by that statistic. If you're looking in Mount Pleasant, downtown, James Island, West Ashley, areas that are close to the downtown Charleston Peninsula, it's a seller's market, make no mistake about it. It's a competitive market. The average difference between the listing price and the sales price in Charleston County is 4.5%, by the way. So if you put your home on the market for $100,000, it's going to sell for $95,500. The average price per square foot went from $149 to $163, and the total number of sales that we'll have in our market this year will be close to 7,200. In 2012, we had under 6,000. So a lot more sales this year. I expect it to continue to progress toward a seller's market. I expect pricing to increase, and that's why we are now going to talk about what I think is going to happen in 2014. So first and foremost, I think the good news for housing is that price gains next year are expected, and although I don't think they're going to be as strong as 2013, and in fact, I think that the pricing for 2013 increased too fast. But the Case-Shiller Index says that the pricing nationwide is going to increase by 7%. I don't think we're quite going to see 7% across the board in the Tri-County. I'm thinking more 4 or 5%. In some areas, it will be more than others. In some areas, of course, it'll be less than others. But I think the average, if you look at it, I think it's going to be about 4 or 5%. So if you're a buyer in 2014, here's what you need to know. Number one, waiting on inventory, can make sense if you're looking for your dream home and you have the ability to wait. But I do think that in 2014, waiting for the perfect house to come on the market is going to cost you. And it's going to cost you not just in terms of the price increase that we'll likely see next year, but it's going to cost you in the interest rates increase. I think interest rates are going to go up. I think the majority of the market knows that the interest rates are going to go up. And if the market thinks it and they're already, aware of it and they've kind of accepted it, then guess what? It's probably going to happen. I would, another thing I would say about 2014, if you're a buyer, is that work with a lender that can get you to the closing table quickly. I think the days of a 30 to 45 day loan process are over. And frankly, when lenders like Movement Mortgage or mortgage brokers can get your loan closed for the same price, for the same interest rate, and for less headache in 7 to 10 days versus 30 to 45 days, there's some serious value in that, especially in an environment where interest rates are rising. So I'd do your homework on lenders, and if you need one, give me a buzz, and I'll put you in touch with one, 843-345-1273, or listingsincharleston.com. And then the last thing that I would say, if you're a buyer in 2014, is lead with a credible offer. We just read through the average difference between list price and sales price in Charleston County. In Dorchester and Berkeley County, it's 2.5%, by the way. So you're going to get 2, 3, 4, maybe 5% off the list price. So these days of offering 20% below the list on a well-priced listing, it's, the seller doesn't have to respond to your offer. And if we're in an environment where multiple offers are common, guess what? If a seller gets a great offer and it's cash and it's for a few percentage points off the amount, and you made an offer for 20% below, they don't owe you anything. They don't have to say, well, I got another offer, I'm going to give you a chance to increase your bid. They don't have to do that. They could just say, nope, take that offer. I don't even want to fool with that other person, and let's put it under contract today. So something to keep in mind if you're a buyer. Now, if you're an owner, you're planning on staying inside your house, this is going to be a good year for you because you have flexibility on your side. Prices are going to rise. Inventory is going to still be in a seller's market, in my opinion. So take this opportunity to take care of some of the deferred maintenance. Do some of those renovation projects that you've been thinking about doing. But my biggest tip for homeowners that are deciding to stay in their home is to do your remodel within reason. If you're in a $250,000 neighborhood, it does not make sense for you to put in a $50,000 kitchen. So just be smart about the renovations you plan on doing in your home. And if you have questions, one of the best resources available to you is a real estate agent, because they can tell you what the norm is for that neighborhood. And again, if I can help you with that, let me know. But if you're a seller in 2014, here's what I think you really need to focus on. Number one, you need to watch your neighborhood. You need to, in 2013, one of the reasons why we had such a big spike in pricing is because sellers were slow to get their house on the market. I don't think that's going to be the case in 2014. And with everything that I'm seeing and all the people that I'm speaking with, there's going to be a big number of people that hit the market in January and February and March and April. So watch your neighborhood. If you see a bunch of people starting to put their house on the market, that's basically your sign that appreciation in your neighborhood is about to slow, because now you've got some competition. So just watch your neighborhood. have a real estate agent, or if you don't have one, have me set you up with a search so that each time a new listing hits your neighborhood or hits the market in your neighborhood, you're getting an email about it. Number 2, price it right the first time. Don't put it on the market and inflate it with the idea that at some point in the future you're going to drop the price anyways. Price it right the first time, sell it, move on, and buy another home, because in this environment, interest rates are going to rise. And then the last thing, which I've had to do a lot this year, is play tour guide with the appraiser. When prices are rising, appraisals lag. So you need to help that appraiser understand what today's value is versus what properties were selling for 3 to 6 months ago. That's key. And if you need help with that, again, reach out to me. So those are my 3 key points for sellers if you're considering selling in 2014. Thank you very much for a great year. Have a great holiday and a great new year. And I'll look forward to being on the air with you January 2014. You're listening to the Brian Beatty Real Estate Show here on the Big Talker, 1250 WTMA.
Join us for another edition of the Brian Beatty Real Estate Show next Saturday morning from 8 till 9. Contact Brian Beatty online at listingsincharleston.com. That's listingsincharleston.com. Or call him at 843-345-1273. 843-345-1273.